Now we are reaching the end of this monetary experiment worldwide, where people are starting to losing trust in money, in fiat money. If we would see a collapse of the paper trading system centered around the COMEX with all these unallocated precious metal positions, you could expect gold to move much higher than $4,000 or $5,000 per ounce. I wouldn't be surprised when gold would shoot up to 10, even $20,000. I wouldn't be surprised that silver would move in a very quick and violent way towards $100, $200 per ounce.
Gold is now trading above $4,300 an ounce, its highest price since the 2008 financial crisis, and silver prices are soaring above $52 an ounce in the largest markets, and on the futures exchange itself. Backwardation is a very exotic sign of physical supply-demand tightness and a willingness by industrial users to pay high prices now to obtain delivery. This impressive performance is way above what is common in the market and indicates that gold is experiencing a paradigm shift in its place in the world's monetary system. Meanwhile, larger banking institutions such as HSBC have drastically increased their 2025 gold price projections, citing the rising safe haven flows, geopolitical stress, and the intensification of credit risks. World central banks are actively buying gold to their reserves, secretly diminishing their dependence on U.S. treasuries, and abandoning a system based entirely on fiat reserves, an institutional recognition of the long-term loss of faith in paper money. The year 2023 and 2024 marked a first in a long history, as central bank gold holdings since 1996 have exceeded those of the U.S. Treasury. This landmark event signifies a fundamental shift in the reserve asset preference of monetary authorities worldwide. By December 2021, central banks around the world had about 35,863 tons of gold, and their purchases had been at a multi-decade high. The central banks of emerging markets are driving this trend, with a significant number rapidly accumulating their gold reserves. Investment guru Willem Middelkoop warns that the world is nearing the end of the fiat money experiment, as more people across the globe are losing faith in paper money. Most people think that gold is nearly at a peak, like it was in the 1980s, but he cautions that it might not be the case this time. In case the paper-based COMEX trading system does not deliver physical metal, the price of gold and silver may run out of control and far ahead of mainstream expectations. Middelkoop thinks that gold may soar to as much as $10,000 or even $20,000 per ounce, and silver may sharply reprice to $100 to $200, particularly when the paper market is overwhelmed by physical demand. We're about to explore the video, but first, make sure to subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
I prefer to see gold as almost a three-phase history. You had the gold standard, which actually was running for hundreds of years. And of course, we had separate stages of the end of the Goldbug era. But it actually stopped in 71 because then the dollar was taken off of the gold standard. And of course, it will be in your documentary, but the history of Bretton Woods. But most important aspect of the Bretton Woods conference for me is that the European countries pressured the US to accept that the dollar could always be exchanged for gold. Otherwise, France wouldn't have accepted the Bretton Woods deal, which was designed to make the dollar the heart of world's financial system. So the US always had to promise that the dollar was as good as gold. And European countries, so this was in 1994, they had to promise this. And European countries kept the US at its promise in the 1960s when they start to send all their surplus dollars back to the US and demanding gold. The French even sent one of their marine ships to Manhattan to collect the gold from the New York Fed vault on Wall Street. So we have this era before 71, and then we have the fiat era after 71. And now we're reaching the end of the, monetary experiment, one could say, in which all money worldwide is no longer backed by gold. Even the Swiss stopped their gold backing in the 90s. They were the last one because still many people still think that the Swiss franc is backed by gold. No, it's backed by hedge funds, which has shares in MicroStrategy and other tech companies. Look at the balance sheet of the Swiss National Bank. They have all these holdings in tech companies, and it's crazy. They even have a position in MicroStrategy, which is a Bitcoin project. So even the Swiss money is no longer backed by gold. And now we are reaching the end of this monetary experiment worldwide, where people are starting to losing trust in money, in fiat money. And first, this happened in Zimbabwe, Venezuela, Lebanon. But now it's happening in Australia. Well, you at Gold Republic, you guys know way better than anybody else how many people feel attracted to hedge their net worth now by buying some physical gold and silver, just like the old days. And actually, you might be aware, I was a journalist for over 20 years. I stopped being a journalist in 2008. Why in 2008? Because that's when the Lehman crisis started. And I was aware, because of all my study on monetary history, that people would start to flee towards gold and silver again when a huge financial crisis would start, which happened in 2008. So I stopped in 2008 to start two companies related on precious metals. But I was expecting that the distrust on paper money would be happening way sooner, but it's now 17 years after Lehman, we see these lines for gold. It's my idea that many people think this is the top for the gold market. It's just like 1979 or 1980. Gold is reaching $4,000 or $5,000. That will be the top, and then it will go down again. But I'm a bit afraid that the collapse of the paper trading system, of the COMEX paper trading system, will send gold, silver, platinum, palladium much, much higher. And that's all to unfold still.
What price targets realistically within the next 12 months?
If we would see a collapse of the paper trading system centered around the COMEX with all these unallocated precious metal positions, you could expect gold to move much higher than $4,000 or $5,000 per ounce. I wouldn't be surprised when gold would shoot up to 10, even $20,000. I wouldn't be surprised that silver would move in a very quick and violent way towards $100, $200 per ounce, because silver is needed as a commodity, and that's different than gold. So there's even an analyst I follow, he said you could have a gold-silver ratio 1-to-1. So which means, let's say gold goes to 10,000, silver could go to thousands of dollars per ounce. And silver is such a tiny market, it's such a small market, and it's so important for the industry, for the solar panels, and even for the iPhones. So we as a fund, we are as investors, we are accumulating ounces in the ground, waiting for these very big spikes to happen. I think that the big prize for us as commodity investors is not what the money we make now. We're up 65% year to date. That's great. We have 200 million euros under management. That's great. But I think the big prize is still ahead of us.
Gold has existed as a financial base for thousands of years in many civilizations and economic systems. The Bretton Woods system, 1944 to 1971, allowed the international monetary order to be partially supported in gold, the dollar being convertible into gold at a constant rate. The post-1971 fiat experiment can be viewed as a historical anomaly in monetary history, the first time that all major global currencies have been running without any tangible support. The existing tendencies indicate that the pendulum has swung in favor of hard money principles, with gold as the central point. This revaluation of the monetary values is shown in the historic gold rush. The thing is that we are not only experiencing a gold rush these days, but according to Willem Middelkoop, we are also re-evaluating what money really is in the world. The fact that more countries, institutions, and even digital platforms are returning to non-digital resources like gold is a good sign that hard money principles will be reinstated. It also validates his old admonishment that the variability of fiat was never permanent. Now let's redirect our attention to a video.
And the US almost succeeded in the idea, having this idea accepted worldwide that gold was just a commodity. There were a few lunatics like myself, the Goldbug, who never trusted this idea. And I became part of a group in the US called GATA, GATA, which is like a financial Greenpeace, who always pointing to the cheating of the US Treasury and Federal Reserve, and always were convinced that one day gold would return. And I became very involved with them in the late 1990s because I was a real estate investor in Amsterdam. I had a ton of mortgages, and I was studying the financial system. And the idea that gold would be the perfect hedge on your net worth, that resonated very well with me. So I started to study it from the late 1990s. And I remember I was at home with my wife at that time. We just bought a house outside of Amsterdam. And I said, I think I understand how the financial system works. It was in 1999, and she laughed at me saying, "Oh, you're the only one who gets it." But I was always convinced that one day people would understand that the financial system is a house of cards, and it would collapse one day, and people would start to flee to gold again. So I was working on this idea from that moment on. So in 2002, 2003, I was actually preparing for the financial crisis which would arrive one day, and I expected it to arrive earlier than 2008. I started working on my first book, Als the Dollar Valt, when the dollar collapses in 2005. And I was in a hurry because I was afraid the book would arrive too late. Actually, it was published in August 2007. That was the month the credit crisis started. That was 1 year before Lehman. And actually, I started planning to have this life after journalism in which I would be in business and make money on the flight towards gold. And that's why I started the bullion business, and that's why I started the Gold and Discovery Fund, later renamed Commodity Discovery Fund, in which offices we are. So for me, there was always this period before the crisis, before 2008, and the era after 2008. And I wasn't surprised that central banks were starting to accumulate gold after 2008, because I started advising my readers to do the same by selling them physical gold and silver. But I was shocked that journalists and other analysts never saw that watershed moment. For me, Lehman was a watershed moment. And now we're starting to learn that the repercussions of these watershed moments are gigantic, because now all these central banks are accumulating so much gold that the gold price is starting to move. And even the tethers of this world, so the Bitcoin crowd, is starting to back their digital currencies now with gold. Tether is one of the huge buyers of physical gold. Tether is as big as the Chinese central bank now in the physical gold market. The latest numbers. So we're witnessing this flight out of fiat into the hardest assets possible, being gold, and also Bitcoin, which is digital gold for me. And this is the start. This is the beginning of the end of this financial system. And I wrote in the Big Reset that around 2020 we would see big changes coming to the financial system. It always takes more time than you think, it always takes longer, but we're in the first innings of this monetary reset now.
From the moment gold was dismissed as just another commodity to the rise of a global fiat currency experiment, the financial system slowly drifted away from tangible value until growing debt, monetary manipulation, and rising distrust forced a reassessment of what real money is. Physical accumulation by central banks, digital currencies now backed by gold, and a historic surge in precious metals all point to a world quietly exiting paper promises and returning to hard assets. With the reset already unfolding and confidence shifting toward what cannot be printed, the question now is whether you will position yourself before the world fully reprices real wealth. Join the conversation, share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.